In its budget proposal for 2024, the Biden administration announced that it wants to make some major tax rule changes for cryptocurrencies and for capital gains. If you're someone who invests in cryptocurrencies or other assets that experience capital gains regularly, then these changes could heavily impact you. In this video, I'm going to break down everything that you need to know about these proposed rule changes so that you can prepare yourself in case they actually become law. So let's dive in. Here's the cryptocurrency changes that we can expect by the Biden administration. The changes that the Biden administration wants to make regarding cryptocurrencies are around the wash sale rules. A wash sale is when a person sells an asset at a loss and then quickly rebuys the asset soon afterwards. The purpose of doing this is to lock in trading losses that can be used to get tax deductions. Wash sales are a type of tax loss harvesting. The wash sale rule forbids this practice and is already applied to stocks and bonds under the current tax laws. Well, the Biden administration wants to change the laws so that the wash sale rule applies to cryptocurrencies as well. Now, how is this going to affect investors? Considering the fact that the cryptocurrency market is extremely volatile, many savvy cryptocurrency traders have been using wash sales to provide a layer of financial protection for themselves during downswings and bear markets. So if the rules are changed, cryptocurrency traders and investors would no longer be able to use this loophole to get tax deductions that can help them offset their gains. In other words, it looks like this loophole might be coming to a close. So you might want to consider adjusting both your cryptocurrency trading strategy and your tax strategy altogether. Now, what are the changes that we can expect with capital gains? In addition to the proposed wash sale rule changes, Biden also wants to nearly double the capital gains taxes for investors making over $1 million per year from 20% to a whopping 39.6% for long-term investments. If this rule goes through, it would dramatically change capital gains taxes for investors. 39.6% is a substantially more than 20%, and it would mean that if you are a wealthy individual, Uncle Sam will be reaching into your pockets and scooping out an extra 19.6% for himself. Now, why is the president proposing these changes? One of the main reasons why Biden is proposing these changes is because he believes that they will help to reduce the national deficit in the United States by about $3 trillion over the next decade. These changes are a part of his overall fiscal budget plan for 2024. In addition to the wash sale rule changes and the capital gains tax increases, the Biden administration also is proposing a 25% minimum tax on the top 1% of wealthiest Americans. So, under the newly proposed rules, if you're a wealthy American, you could potentially be forced to pay significantly more taxes, not just from increased capital gains, but also from this new 25% minimum tax. Now, will taxing the rich actually help? Many people believe that all we have to do to solve our deficit problems is to simply increase taxes on the wealthy. However, it is not that simple. There are a number of things that can happen if taxes are increased too high on the wealthy. First, wealthy people can simply leave the country and move to a nation that does not tax them as much. In fact, there are a number of nations around the world that impose no income taxes and no capital gains taxes. Wealthy people have the means to move to these places, and a lot of them might just be pushed to leave the nation if taxes are increased too high. The exodus of high net worth individuals from New York City in 2020 is a perfect example of what happens when taxes on the wealthy become too high. In 2020, New York City saw 10% of its population of people who make over $750,000 leave the city due to high taxes. These people collectively earned $21 billion a year. After they left the state, New York can no longer collect state taxes on this revenue. Many other high tax states, such as California, Massachusetts, and New Jersey, have also experienced an exodus of wealthy citizens in recent years as they flocked to lower tax states, such as Florida, Texas, and Arizona. For example, in 2020, California lost $17.8 billion in gross income due to the exodus of wealthy individuals. Meanwhile, Florida gained $27.3 billion. So this goes to show you that raising taxes on the wealthy does not necessarily create the intended results of raising income for the government. Higher taxes can also reduce some of the incentive for wealthy people to even want to work harder to make a lot of money in the first place. So reducing incentives could also hypothetically result in a decline in economic output and thus a decline in the amount of tax revenue the government can receive. However, the Biden administration appears extremely optimistic that this massive tax increase will help to solve our deficit problems. So how have Republicans reacted to Biden's proposed tax changes? So far, Republicans do not seem to be very enthusiastic about Biden's proposed rule changes. Many Republican leaders have criticized the budget proposal for raising taxes too much and otherwise creating changes that perceived as ill-advised. Speaking about the Biden administration's budget proposal, Republican Senator from Kentucky, Mitch McConnell, said that the president's budget is replete with what they would do if they could. Thank goodness the House is Republican. With this statement, Mitch McConnell is making it clear that he believes that the Biden administration will not be able to get its budget approved because he thinks it will be blocked in the House. Another Republican senator, Mitt Romney, promised that Biden's proposed tax increases on the wealthy will not become law. Romney commented on Biden's budget proposal by saying it's not going to happen. Obviously, he knows that Republicans are not going to sign up for raising taxes. Time will tell whether Mitch McConnell or Mitt Romney are right or whether Biden's budget proposal will get enough support in the House to pass and become law. Right now, it is not clear exactly what will happen. But what are the Medicare changes that we need to be aware of? In addition to the proposed cryptocurrency wash sale changes, the doubling of the long-term capital gains taxes, and the 25% minimum tax for top 1% of all earners, Biden is also proposing another tax hike on wealthy Americans in order to help fund Medicare into the future. This tax hike would see people who are making over $400,000 per year have a Medicare tax raised from 3.8% to a total of 5%. As a part of this plan, certain loopholes would also be closed to make sure that capital gains income and other income are subject to the Medicare tax. Now, regarding these Medicare tax changes, Democratic Senator Chuck Schumer said that the president's budget will address what America cares about most, extending Medicare solvency by 25 years. Now, what does all of this really mean? Essentially, the Biden administration wants to close a lot of the tax loopholes and impose major tax hikes on the American people. I guess the only good news is that most of these tax hikes would only apply to the wealthiest of Americans. So the vast majority of American citizens would not see their taxes increase substantially, with the exception of the long-term capital gains taxes. The bad news is that if you're a wealthy American making at least $400,000 a year, it might soon become a lot more expensive for you to live in the United States. So if you're rich and if you don't want to give any more of your hard-earned money to the government, then these proposed rule changes from the Biden administration might not be your favorite piece of news lately. Some people are excited about these proposed tax changes, especially those who strongly support Medicare. However, many are opposed to these proposed tax changes. For right now, Republicans and Democrats appear to be in disagreement about Biden's proposed tax rule changes and his overall budget proposal for 2024. But as often occurs, it is likely that some sort of compromise will be struck between the two parties regarding this issue. We will see what happens. In the meantime, if you have any questions about these proposed tax rule changes, or if you have any other tax-related questions that you need help with, feel free to get in touch with my team by clicking on the link in the description below. As always, you guys are more than welcome to like, comment, subscribe. I always enjoy connecting with you all. And feel free to check out my Tax Alchemy course, where I teach you how to minimize your tax burdens using the same strategies that the wealthy Americans do on a yearly basis. You can find a link to the course in the description below. That's it for today's video, guys. Thank you so much for making it all the way to the end. Look forward to seeing you in the next one. Cheers.